Hey everyone, welcome to October. Craig, what's going on in the market? Tell us a little bit about what's happening.
All right, so right now we have 19,643 listings versus this time last year we had 13,400 listings. That's up 47%.
And just remind everyone again, what's like a normal supply?
Normal, I mean, we're getting close to that normal range.
So anywhere from like 20 to 25,000.
We're really nearing that normal range of listings. So this is where we should be heading. Under contract listings, I find this is an interesting statistic. Under contract listings, we have 7,261 listings versus 6,499 last year this time. That's up 11.7%.
Do you think that's due to just more supply on the market and more?
I think definitely more supply has helped because there's choices now, right? So more supply, more choices for people. Rates are down. They've been down for a few months. So that's been driving this a little bit as well, I think. They're also up 9.1% from just last month.
Wow.
So we've had a really strong increase in just a month. And that I do believe is probably driven by, again, inventory and rates.
Yeah.
Right?
Yeah, there was that really nice drop in rates, almost down into the fives.
Right.
And we were kind of talking offline a little bit about what the Fed rate cut did. And we talked previously about this. Right. That's already kind of baked into the market in anticipation for the rate cut. Right. There was sentiment out there that it could have been 25 basis points and ended up being 50 basis points. So there was thought around it that could potentially move rates even lower. What generally happens, though, and if you look at the historical chart and data behind Fed rate cuts and what happens to the 10-year Treasury, which is directly tied to mortgage rates, the 10-year ends up going up for a bit. It spikes on average about 30 to 40 basis points and then ends up dropping. So there's this initial spike in the 10-year, which means that rates go up, which we've seen. So on average, anywhere from around 6% all the way up to 6.5% today on October 14th. You see that increase to be relatively normal for previous rate cuts.
Right. We were talking about that actually goes back quite a ways.
Yeah, to the 80s. Yeah. So if you look at that, I mean, yes, it is a little bit scary initially, but if you just look at that historical data, I do think that rates are moving in the right direction. Inflation's moving in the right direction. Jobs are still very strong. Jobs numbers came out last week, stronger than anticipated. So we'll see where that ends up. But overall, if you're looking at just the outlook on potential rate cuts in the future, there could be potentially 2 more rate cuts to end the year. Now, if there are 2, who knows what's going to happen to mortgage rates? That could already be kind of baked into what we're anticipating. So we could see rates kind of stagnate through the end of the year and into next year. But there's a lot to be determined on that. There's an election coming up, so there could be some volatility around the election time. But overall, I think the sentiment is that rates are moving in the right direction.
I think what's still confusing to a lot of people is that when they hear the Fed rate cuts, there's an automatic assumption that relates to mortgage rates. Correct?
Yeah. Historically, it does trend similarly. But it's not like an exact 50 basis point rate cut. You're going to see a 0.5% decrease in mortgage rates. That's just not what happens. And as I was mentioning earlier, rates tend to go up a little bit after a rate cut. So all is normal in that regard. But I do feel positive about the overall rate outlook moving forward into next year.
I mean, just buyer activity has been good. I mean, just anecdotally, open houses have been very busy the last few weeks. There's been a lot more buyer activity, contracts coming, as we can see by these numbers right here that I just talked about. The other good news is median sales price is up 2.3 from last year, 2.3%. There's some markets where there's been a little bit decrease, but it's an overall average in the MLS. So 2.3% from last year is pretty good.
And I think this is kind of the season that luxury starts coming back. And
so we should
we'll see that drive up even further, I think.
Yeah, so prices are definitely stable. And even as the analysts here say in Crawford report, people that they actually see the prices could continue to go up like we just said.
Yeah.
So that's kind of trending that direction.
For sure. Yeah, and I think it's going to be a strong fall season for us.
Yeah, I think it's already starting.
Yeah. it's already kind of starting, and as people trickle in to buy second homes and all of that, I think it's going to be a very strong fall season.
Yeah, and it's mid-October, and we're getting down into the high 80s. So
yeah, this week
the weather's
finally, yeah.
So yeah, definitely. Well, that's all I have this week.
Yeah, if you have any questions, feel free to reach out. You know how to find us.
All right, thank you.